Hello, I'm Greg Bunnell. Welcome to Market Call tonight. Our guest is Kim Bolton. He's president and portfolio manager at Black Swan Dexteritas. And he wants to take your calls, emails, and tweets on technology stocks. So give us a call, toll free, 1-855-326-6266. You can send an email to marketcall@bnmbloomberg.ca, or you can tweet us at Market Call. Good to see you again, Kim. Always good to have you on the program.
Thanks, Greg. Great to be back.
So how are we feeling about technology stocks heading into earnings season? What are you anticipating?
Well, it's been interesting over the last week because it sort of feels like people are taking some profits in the strength. And a lot of our stocks are certainly within reach of their price targets, their 12-month price targets. So I guess it's not so surprising that we're sort of struggling around this level. You know, first 10 days of April, you had a good sprint after March where it sort of consolidated after a big run through January and February. But I think it'll be a little consolidation in here.
All right, so people might want to take some of their winnings off the table. And now, I mean, Netflix today, even though the quarter looked good, they warned that, well, you know, we did raise the prices on our U.S. customers. Maybe our net additions won't be as strong for the rest of the year. The stock, you know, stepped back about 1.5%.
Well, it opened up 3.5%. However, last night, after the earnings came out, it was down 7.5%, 8%. So it actually came back, was up 3.5%, and then just sort of settled down 1%. Yeah.
So I know that when it comes to investing in tech, you have a strategic approach. You look at trends over a period of time, and you have some very helpful charts always to illustrate that. I think we can show the audience one right now, but your strategic tech trends for this year and next.
Oh, okay. You know, the trends and themes don't change that much. Let me just sort of paint the picture here. What's been happening over the last 10 years and is probably has a runway of another 10 years is the bullseye, which is it's all about digitalizing business. But then there are some themes around that. There are 3 themes, and then there are 9 or 10 trends that sort of revolve around that. Would you like me to sort of take you around this?
You know what? You know what jumps out to me right away when I look at this is on the outer rim, 5G, because of course this is the technology everyone's excited about, and a lot of people are saying the reason why Apple was willing to settle with Qualcomm is they realized Qualcomm had them in a bit of a corner when it came to putting 5G in their next generation phones.
That's right, because they're the leader when it comes to the modems, and it sort of surprised a lot of people that they actually resolved it on the steps up to the courthouse. But I think the leadership of both companies realized that they had more to lose than to gain.
All right, and often that will be the piece. Your investment methodology as well. Let's go over that before we start taking some calls after the show.
Yeah, we have to sort of, you know, the technology arena is just massive. You know, if you just take the vendor side of it, it accounts for about 1/3 of the market cap around the world. But if you take on top of that, those companies that are actually using technology as end users to really make themselves more efficient and more effective and actually make more money. That expands well beyond 50–60% of the marketplace. So but there are ebbs and flows within it. And so in our investment methodology, we have an investment committee. We originally started out being seeded by some very successful technology entrepreneurs, and we built an investment committee around that, and they give us insight into where they're making money. And so it's difficult to look at the whole market, the whole technology arena, but if you can talk to the smart people out there that are making money on the private side, they can sort of direct you to those pockets and where the trends are. And then we can drill down within those sectors, understand them, see where the moving parts are, and then look for the leadership.
Not a bad advisory team to have in your back pocket.
Exactly.
We'll be back with Kim Bolton. He's the president and portfolio manager of Black Swan Dexteritas. And he wants to answer your questions on technology stocks. So give us a call. It's toll free. 1-855-326-6266. get this market call started. We have an email from Kim. Viamed, could you please give me your thoughts on Viamed?
Thanks, Kim. Nice name.
Solid name.
Viamed. Kim, we don't own it. We do follow. It's an interesting company, but it's smaller. And what they do, they're a supplier of home care, medical, more respiratory type products. It's a fair size. It's got a market cap of about $280 million. Currently, I think trading around $7.50.
Yeah, $7.35. We apologize to the audience. We don't have a Viamed chart for you, but it is it closed today at $7.35.
Yeah. And there aren't that many people that actually follow, but we sort of predict, if you look out 12 months, you could get it up to around $9.50, $10. But with a lot of these companies, they have decent growth on the revenue. I think Viamed has growth on the revenue side of just shy of 40% year over year. Net income is around 24% year over year. But it still has to spend a lot of that money out there because it's a very, very competitive place. And on top of that, they have the regulatory issues here and also with their clients down in the United States. And especially, as you probably saw today, with the healthcare sector under pressure down in the United States, it was off 3.5%, 4%. Because of the whole Bernie Sanders syndrome and sort of making Medicaid available for everyone. So it's a very, very competitive place that they're involved in, but they're very good at it.
We have John in Montreal on the line. What's your question, John?
Good evening, gentlemen. My question's on baleen technology. As you know, in the high-tech world, everybody is fighting to get ahead of the competition in regards to 5G. I'd like your opinion on the stock, the latest news that you could fill me in. And do you own it? Greg, please, if you would, consensus, I'd appreciate it. Thank you very much, gentlemen.
Sure thing, John. Thanks. What do we know about baleen?
Thanks, John. We don't own it. It's just too small for us. It's got a market cap of around $155 million. And it's in the right place because they are an equipment supplier for the 5G infrastructure and embedded solutions and so on. But they're small. And so it's more of a local play. Currently trading, I think, what was it, around just shy of $4?
$3.90.
Yeah.
$3.90 at the close.
And we sort of have a price target on it of $5.75. We think we can actually, if we were to buy it, it would be down more closer to about $3.25, $3.
All right. As far as the street is concerned, John, there's 4 analysts following baleen. They all like it. They have buy recommendations. And indeed, the 12-month target price, when you put them all together, is $5.75. Got Ram on the line from Calgary. What's your question, Ram?
It's about Baidu. That's Google of China, and it's selling at a right now market multiple, like PE ratio is about 15 or so, and it has dropped down quite a bit. Like, what's your opinion about this one? And if I may ask, if you have to pick between Baidu or Tencent, which one will be your preference, sir? Thank you.
Showdown. I like showdowns.
Thanks, Henry. You're right. Baidu is the Google of China. Terrific search engine. And very much like Google, they have a lot of investments spread around in other places. For example, they're into Ctrip, which is the big retail e-commerce group. IQIYI is another one on the e-commerce side that they have an interest in. We own it. We actually own it within an ETF. So with the FDN, we own Google as a single stock, but we follow Baidu because of its participation in the ETF FDN. Interesting. It was just announced yesterday. Baidu is a leader when it comes to artificial intelligence, machine learning, deep learning. And they just brought out sort of similar to Google's earbuds for a language translation. So they actually have earbuds that will actually translate real time.
This is Star Trek. This is the universal translator. This is how you can go through the galaxy and understand everything.
That's right. And it can translate across 40 languages, real time. So tremendous company. Now, Baidu, Tencent. We own both of them within that FTN, the ETF. And, you know, the bats, you know, the Baidu, the Alibaba, and Tencent, they're the three leaders, very much like the FANG here in North America. So we like it.
Baidu has 29 buys, 11 holds, and 0 sells. We're going to take a little break, be back with Kim Bolton. He's the president and portfolio manager of Black Swan Dexteritas, and he wants to answer your questions about technology stocks. Give us a call, toll free, 1-855-326-6266. We have Henry in the line from Hamilton. What's your question, Henry?
Good evening. Two things. First, could you just comment on Visa by itself? And secondly, I have a half position in Visa, waiting for the inevitable pullback. Would you recommend, as a matter of investment philosophy, finishing off the Visa position with more Visa, or spreading my bet across an IPAY, a whole number of mobile payment companies? So Visa, and then Visa itself, or an ETF?
Thoughts on Visa and how to play Visa?
Yes, we own Visa. The structure of our portfolio changed coming in this year, just to allow us a little more flexibility in the marketplace. So about half of the portfolio is in ETFs, spread across 5 ETFs, and then we have 18 single stocks, and that's about 50-50. Of those 18, Visa is one of them. We actually have 3 within that e-commerce side, which is Visa, PayPal, and Square. Really, really like Square, Henry. But you know, Visa, as I talked before about our investment methodology, we look for the trends, which is in the e-commerce, and therefore the leadership of Visa, and that's why we like it. And it's actually fairly well priced because it's got a PEG ratio of only 1.71, and we've got a target on this of up at 165.
And what do you think Henry was saying? I think he was saying he had a half position. Should he fulfill the rest of that position, or I think he was talking about spreading it out?
2 things, Henry. I would suggest, because a lot of the stocks are within reaching distance of their 12-month price targets, especially on the technology side. So, Henry, I think you'll get an opportunity to actually buy these a little bit cheaper. The other one, Henry, I'd suggest that you look at is Square. And Square has done a fabulous job. Dorsey, you know, Square has got a organic revenue growth of over, I think it's around 53% year over year. And so I think it's, they're more agile because they're a little bit smaller. They don't have as much legacy that they carry around with them. So I'd look at both of those, Henry. Either add to it now with Square, or just wait for a little pullback in Visa, which I think you'll get over the next couple of months.
We have Danny on the line from Pickering. What's your question, Danny?
Good evening. My question is JD.com, please. Thank you.
JD.com. What do you think about them?
JD, you know, if the CEO could only stay out of the limelight, it would be best. But you know, JD it's the largest online retailer. It's the biggest overall retailer within China. It's got a solid core. It has continued upside in spending per user. It's got an ongoing $1 billion buyback program, and its share price has nearly risen about 50% since Christmas Eve. And we've got a price target on this of $42.
Okay, 29.85 today, the ADR in New York. Sharon in Winnipeg. What's your question for us, Sharon?
Thank you for taking my call. I have held Cisco for about 5 years, and would you continue to hold? What is your target price? Thank you, and I'll hang up.
Cisco's been on a great run since the lows of December.
Sure has. Thanks for your call, Sharon. Yes, we own it. We actually, today is Wednesday. We actually took a third of our position off, so we're down to about a 3.5% position in Cisco. We have a price target on it of up at $62. That's a 12-month target, and so when we get within sort of that 10%, we start to shave it back. Cisco, they've done a fabulous job of actually transforming their business from a hardware to a software, getting in on the subscription bandwagon. And on top of that, they're in the right place at the right time, particularly when it comes to the 5G deployment. So they are the equipment suppliers to the 5G, and they're a leader out there.
Right, like Cisco. Jack in Toronto. What do you want to talk about, Jack?
Hey, good evening, gentlemen. I'd like to ask about NVIDIA. I hold the June 21st 180 calls, and I just want to know what you think a good exit point would be, or would you roll it over for the next year, and where do you see the price going?
All right, NVIDIA. What do you think about NVIDIA?
Okay, Jack. We actually took profit on NVIDIA. Terrific company, and a leader when it comes to the chip supplier, when it comes to the gaming side, for the artificial intelligence, for the machine learning, the deep learning. And they just have carved out a terrific space for themselves. However, as you can see, we have a price target on this, a 12-month price target of 195. It's had a good run, and we think we can actually buy it back.
Yeah, the gaming card business, obviously very lucrative. My youngest son, about a year ago, bought this monster gaming machine. I thought he'd be all set, and he saved up his money, and then he said, well, I need to get a new graphics card for it. I said, it's a brand new machine. He's like, yeah, well, it doesn't cut it. So I think the demands are pretty high when you get into the gaming space.
And it's interesting in that whole gaming space because there is a big transformation because they predict over the next 12 months that right now the mobile side actually accounts for around 20%, and over the next 12 months it's going to actually grow to 55-60%. So I hate to tell you, Greg, but your son's probably going to come back and want some more gear for his mobile device.
It's his birthday this week, so I trust his grandparents will enrich him duly. We're going to be back after the short break. The Past Picks coming up next. Time for the Past Picks. We go back to December 14th of 2018, and you liked Microsoft at the time. How has Microsoft been performing since then? Total return to 15%. Not too bad.
Yeah. Well, I don't know who picked my picks from December 14th, but that was a good time when the swoon was happening. Microsoft, we still own it. We actually haven't taken any profit on it. We have a price target on Microsoft up at 135. We actually just raised it. It was 131. We just raised it up to 135. And even at this level, it's got a peg of 1.68. You know, they've just continued to deliver growth. They're an innovator. They've done tremendous acquisitions. You know, that LinkedIn acquisition has been superb for them. If you go back to 2016, they had sort of annual revenues of $960 million, and this year they're going to be looking at about $5.3 billion. And then on top of that, the technical side actually looks very good for Microsoft, and you can see that the technicals are positive by the options action that's going on around the stock, because there are quite a few calls that are being bought, you know, up around 130, 135, 140.
Okay, the next one on the list was Xilinx. Nice total return of 53% since then.
Yeah. So this is in the chip sector. You know, you have analog, you have digital, and then you have these field programmable gateway array chips, which is the leadership is with Xilinx. Basically, these field programmable, it's just like the name it says. And so they design integrated circuits that are designed so that developers can actually configure the chip and customize it to whatever sort of service or outcome that they want. And they've really carved out a great niche in this. So their leadership in communication equipment, in the data centers, various vectors within the data centers, all the way from computing to networking to storage. Now, we've actually taken a half of the position off here because we had a price target of 122. We took it off about 2 or 3 weeks ago, and we look to actually buy it back if we can get it back down to around 100 to 110-ish, if we can buy it back.
Final pick was Yaskawa Electric, and this is up total return 44%. Look at that, 3 winners. That's what we like, right? We want to make some money here.
You know, this Yaskawa, there's 2 of them that come out of Japan. There's Fanuc and there's Yaskawa, and they're very cyclical. And you can see it in the chart formation because they sort of struggled over a period really going through the sort of the first 9 months of 2018, and then they finally got their legs under it. Markets started to come back. They're involved in machine automation, robotics, particularly for the automobile industry. Tesla is a big buyer of their products. And so it's a cyclical company. And it's sort of caught the wave very much like a lot of the semiconductors, a lot of the automotive side, some of the banking. So we've got a price target on this of 75, so it still has a decent runway left in it.
Okay, we'll be back after this short break. The number is 1-855-326-6266. We are talking technology stocks, so send us your questions. We have Don in Ottawa on the line. What's your question, Don?
Yeah, thanks, Greg. I have a question on one of the few Canadian technical stocks, OpenText. If I can get your assessment, thanks.
OpenText. All right, thanks, Don.
Thanks, Don. We don't own it, and it makes me mad that we don't own it.
The one that got away?
And I'd love to own it. You know, we'd definitely look to buy it, you know, down in the low or even the mid sort of 30s, but it's just difficult that it never sort of gets there. You know, OpenText is in the right place at the right time. Just for some of your other viewers, you know, OpenText, they sell enterprise information management software, and it just allows companies to sort of digitalize their processes, and not only their process, but also for the supply chains that they have. And they actually even service into the AI-powered intelligence solutions. They're well recognized by their peers, but also by the research companies. Gartner Research, the world's largest independent research company, actually has them as their leader in their Gartner Magic Quadrant content services platform. So here it is trading at about, what was it, about $50?
50 bucks, 50
Yeah.
bucks and change, 50.74.
I'd love to be able to buy it with a, a 30-something handle on it. But in the last little while, the lowest it's gone is down in the low 40s. So terrific stock.
Street likes it too. 12 buys, 1 hold, 1 sell on open text. Michael in Montreal, what's your question, Michael?
Yes, good evening, gentlemen. Would it be possible to have a guest opinion on Caldera Inc.? And Greg, would you be able to provide a 12-month street consensus for it, please? Thank you very much.
Michael. Caldera.
Yep. Michael, we don't own it. Follow it very, very closely. It'll be interesting because they're reporting very soon. And Caldera is the one that actually bought Horton Works. So, they were a mid-sized player. Now they get to play with the big guys within the cloud arena. And they don't have a lot of the legacy that some of the other cloud players actually have out there. So they can actually compete with the leadership in that. So it'll be interesting, Michael. Follow it as it comes into the earnings and how the whole transition with Horton Works is going.
The Street has 12 buys, 9 holds, and 0 sells on Cloudera, Michael, and a 12-month target price of $18.24. If it made it there, that'd be a jump of almost 66% from today's close. We have Caroline in Burnaby on the line. What's your question, Caroline?
I want to ask about OLED Universal Display. I bought it a year ago at $129, and I see it on the rise today at $170.24. I'd like to, make a small profit. What would be a good price to sell, and do you hold it? Thanks.
All right, interesting one. Thanks, Caroline.
Thanks, Caroline. This is something that we've talked about for a long, long time. So just for your viewers, and Caroline, as you know, they're the supplier of the organic screens. So the whole idea of Universal Display is that they get the royalty on the new screens that are going into all the Apple, all the Samsung, a lot of the Chinese. And the reason they're so popular is because the older screens used to have anywhere from about 10 to 15 layers. And with their technology, they've actually scaled it down to 3 layers. And the benefit for the smartphone, for the cellular makers out there, is that it allows them to actually put more power and more tools within the phone because the screens are not taking up as much space. Now, Caroline, you own it at $129. You saw it back in December get all the way down into the 80s. I think it got all the way down to $81. We actually, and we don't often sell out of a whole position, but yesterday we actually sold out of Universal Display. We had a 5% position. We have a price target, a 12-month price target of 177. It was sitting at 172, and so we decided to take the money off the table. And if you can actually, I think we'd buy back a third if we could get it back under 150 and 130, and then back down at 110. So Carolyn is a winner. I'd take a little bit of profit if I were you here.
Maybe a buyback, some at a cheaper level.
Yep.
Street has 12 buys, 2 holds on Universal Display, 0 sells, and a 12-month target price of $167 and change. So we're a little bit richer than that right now on the name. We'll be back with Kim Bolton. He's president and portfolio manager at Black Swan Dexteritas. It's to answer your questions about technology stocks. So give us a call. Toll free, 1-855-326-6266. We have Eric and Victoria with us. What's your question, Eric?
Hi. Good afternoon, gentlemen. I'd like your take, please, on Electronic Arts. And can I also have the street consensus, please? And I'll hang up and listen to your answer.
Yeah. All right. Thanks, Eric. What do you think of Electronic Arts?
Thanks for your call, Eric. Eric, we don't own it. We did own it. We got out of it like early fall of last year. And with a lot of the gaming stocks, the reason they had a great run over a 12-month period, sort of mid-2017 to mid-2018. But then there's been a movement within the whole gaming industry to go away from hardware, consoles, PCs into mobile. And a lot of these companies, Take-Two, Electronic Arts, Activision Blizzard, they're in this transition. You can see it reflecting over into the stock side. And so it's a big change to actually take it from a PC or console to actually make it available in a mobile unit. But that's what the consumer, and it reflects in the stock price. You can see it in all of these ones, how they've actually pulled back.
We have Jerry in Toronto. What's your question, Jerry?
Kim and Greg, actually my question is very similar to the last one. I was going to ask about Activision Blizzard, which is another gaming stock. I'm sure your story might be pretty similar, but I bought it actually at a very low price. Watch it go up to the 80s, I guess, before the downturn in the market. And it seems to be stuck in the 40s with, resistance seems to be around 48. What do you think? Do you think I should sell some of it? I still have like a 400% profit. Think I should buy more? Hold on to what I have? What's your opinion? Do you hold it? And Greg, if you could give us a consensus, I'd appreciate that. Thanks very much.
Sure thing, Jerry.
Thanks for your call, Jerry. Jerry, I think you said that you took profit back up in the 80s on a little bit of it, but you still hold it. So I'd actually hold on to it. I think this transitionary period where they're all getting engaged in the mobile side, and you'll see it ramp up sort of come Q3, Q4 of this year as they look over into Q1, Q2 of next year. So I'd hold it and perhaps maybe look for an opportunity, because I think you'll probably see the market actually have a pullback between now and Q3, and you'll be able to add to it.
Now, if you like the video game manufacturers, do you play them stock by stock, or is there an ETF where you can get a group of them? I just think in terms of, it's almost like cinema. Do you have a hit game or do you not have a hit game? And then you're sort of making bets of whether Activision's going to have the hit one or whether EA is going to have the hit game.
Two ways. Can you buy an ETF in this? I'm sure there are ETFs out there, but the way we look at this space is that you buy the leadership, which is the Activision, the Electronic Arts, and the Take-Two. And they're the ones that actually bring those to us. And then on the other side of the coin, you can buy the equipment suppliers, like the NVIDIAs, as we talked about before on the gaming side. And so, yeah, that's the way I'd actually plan it. We're still trying to get some visibility into when they're going to be able to roll out the mobile side, and they're working hard at it.
It'll be interesting to see, because I watch my kids play, and the amount of controls on that little controller thing. You got to put all that into a touch screen.
Yeah.
That'll be quite a feat. An email from Jason in Vancouver. Clean technology stocks. Can you comment on the clean technology? Ballard, Hydronics, New Flyer. It's now time to take a position. That's what they teach in broadcasting school. If you can't say a word, just go blah, blah.
Thanks for your call. We follow it, but we don't own any of them. And actually, in a previous life, when I was over at TAL and CIBC, we actually owned into Ballard. Ballard's been around for a long time. It sort of has ebbs and flows in it. But the whole clean energy, renewable energy, it has a lot of very solid fundamental drivers that give it a lot of a tailwind. So they should do very, very well. You have the whole idea of the regulatory side giving subsidies for it. There are advancing technologies all the way from wind to solar and so on. So the fundamental drivers are there. But it's difficult. I just find it very, very difficult to find a player out there. Ballard is certainly a leader, but it's just it's sort of 2 steps forward and then 1 step back.
We'll be back with Kim Bolton. He's president and portfolio manager at Black Swan Dexteritas. To answer your questions about technology stocks, so give us a call. It's toll free. 1-855-326-6266. Lance in Victoria. What's your question for us, Lance?
Hey, guys. Thanks for taking my call. My question was just regarding allocating tech funds to a portfolio. I'm in my 30s, and so have some time ahead of me. And what proportion do you recommend allocating towards tech funds? What percentage? And do you worry about any overlap between individual funds you might own and index ETFs that are also part of that? Thanks a lot.
And good questions, Lance.
Lance, that's a great question. I'll give you the bottom line. You should buy the Black Swan Dexteritas Global Tech Hedge Fund. So, depending on where you are in growing your wealth, in our fund, we have 20-year-olds, and I have a couple in their 90s. But the ones in their 90s have a passion for technology. They know it inside and out. One of them is actually on our investment committee. So the way we treat our BSD Global Tech Hedge Fund is if someone is going to put the majority of their wealth in the growth arena, this is the place to do it. And that's why we actually go long and we go short. And for the long, we actually hedge. And so, for example, right now, we've had a great run. You know, when you're up 12% 3 months into the year, and our hurdle rate is 8% for the whole year, we've actually, and a lot of our stocks, even in the ETFs, have started to approach price target. So the bottom line is we're now sitting 50% cash. And the 50% that is invested, I actually have a 36% hedge on top of that. So we're just sort of booking some profit. So the way we treat it is if people are putting a significant amount of their investable wealth, we don't want to lose money on that. And that's how I was always taught when I was over at TAL. So it is important that you actually look at your other parts of your portfolio because you will have overlap. So for example, we have half of it in ETFs and half of it within single stocks. And we actually look at the ETFs so that we actually account for that in our total position. So it's a very complicated question and answer, but Lance, I'd suggest you look at the BSD Global Tech Hedge Fund.
Art in Canmore, Alberta. What's your question, Art?
It's on Intuitive Surgical. It seems to have taken a real beating in the last few days, and I was wondering what your target is and if you follow it. Thank you.
Intuitive. All right, let's take a look.
Thanks for your call. We don't own it as a single stock. We actually own it in an ETF called BOTZ, B-O-T-Z. And it's actually the largest holding within that. I think it's just over 8% within BOTZ. And the reason that we actually own it on the ETF is to actually get that diversification. So within that ETF, there are robotics like Fanuc, and Fanuc is actually the second largest. The largest holding in BOTZ is Intuitive Surgical, and so. That's the way we'd like to sort of play the robotics, machine learning, machine automation side of it. And so that's why I wanted to take your call, is there is opportunity to have participation in Intuitive Surgical, but actually have that diversification within that ETF.
Hey, we only have a minute left for the calls. We want to get Karen and St. Thomas in there. Karen, what's your question?
Your opinion and Erickson, please. Kim, thank you.
Erickson, all right.
Thanks for your call, Karen. They just reported today. I think they're up like 4.5%. And if I recall, they're probably trading around 10.40. We actually took profit in Erickson down at 9.75 because we actually had a 12-month price target on it of $10. But you know, we bought Erickson just last December, down at 8.24. So we've had a terrific run. Ericsson, there's Ericsson, there's Nokia, Cisco, and of course Huawei, which you can't buy. But they are the major ones in the 5G deployment. And it's interesting, Ericsson we believe, is the place to be versus that of Nokia.
Yeah, very interesting. I'm glad Ericsson, we just go by the end of their name, because the beginning of their name, I'm not even going to try it. Telefonkentai Bolaget, LM Ericsson. We'll be back after this short break. Top picks coming up next. It's time now for the top picks. Kim brings lovely boards. We'll show you this one because two of the top picks we're going to pluck right out of this board. You talk about big data software and the services ecosystem. We're going to start with, all right, we'll pluck right from the top. Google. You like Google?
Yep. This is, it was about a month ago I was on with Andy Bell, and we talked about big data hardware, and I really wanted to talk about big data software. And so Google is a leader in this as a data source. And so big data alone will represent about 30% of all data stored in data centers by 2021. And that's up from 18% right now. So it's a huge, huge growth area. And the likes of Amazon and Tencent and Baidu and Google, they are the cornerstones when it comes to the data sources. We have a price target on this of $1,350 US, and it's actually decently priced because it's got a PEG ratio of 1.61. They're one of the best positioned companies when it comes to the secular trends within digital advertising, but then they have a lot of sort of non-advertising revenue streams that come out of the Google Cloud, that come out of Google Play, and their various subscriptions. So I just think it's a gem. It's a hold within our portfolio. We actually have about 5.5% position in that.
All right, right beside Google on the graphic we're showing the audience is Amazon. What do you like about Amazon?
Yeah, this is another player within that sort of data source side of it. As everyone knows, they're a big retail business primed for growth. They have this great money-making machine of Amazon Web Services, which is the backbone of the internet, and it allows that money that they make over there to actually spread it around within other picks, other businesses that they can actually get involved in, which actually goes back to the other side of that graph that you had up there, which is into the data analytics side. So we've got a price target on Amazon of 2,100, and again, it's not expensive. It's got a PEG ratio of 1.78.
And the final one, we touched on this a little bit earlier in the show, Square. You like Square?
Yeah. This is another one within sort of the fintech, the e-commerce side. This is Dorsey's firm. As I mentioned before, the organic revenue growth remains strong. It's just 53% year over year. And it has a great sort of subscription service-based revenue coming out of things, services like their instant deposit, their cash card, their Caviar, their Square Capital. They just have a partnership with the Eventbrite, which is going to supply a lot of free cash flow for them. So we got a price target on Square of $97, a little more expensive than some of the others. It's got a PEG of 2.60.
Any final thoughts for the audience about investing in tech in 2019?
Yeah, I wondered if we could just sort of pull up that last chart, and I just want to sort of talk about, we talked about Google and Amazon, and this is part of the sort of the big data software side, but the other part of it is the analytics, and this is where the runway of some of these companies, so this is the area that goes from 6 o'clock up to 12 o'clock. And you can see the likes, you have Amazon over there, and you got Splunk and Microsoft and Salesforce. But this is where the data analytics And this is the processing of the data. And the processing is actually leading to specialized systems and software, which is where AI and machine learning and deep learning. This is the great runway that you have for these companies.
It's great to have you here, Kim.
All right. Thanks very much, Greg.
As always at home, please consult a qualified financial advisor before you make big investment decisions. And of course, keep watching B&M Bloomberg.